Whether you are a seasoned trader or just starting out your trading journey, mastering algorithmic trading can take your trading strategies to the next level. But as powerful as trading using expert advisors on the MetaTrader platform is, it can also lead to unexpected challenges if you're not following the basic principles of algo trading. In today's video, we're diving into the top 5 mistakes that traders make when using expert advisors, and more importantly, how you can avoid them. Welcome back to OFX Trading Systems. My name is Osama, and today I will show you how to enhance your algorithmic trading skills and ensure that your EAs work for you and not against you. So let's dive in. Mistake number 1, ignoring backtesting. One of the most common mistakes algorithmic traders make with EAs is ignoring the backtesting process altogether. Backtesting is a crucial process because it allows you to see how your EA would have performed in the past under different market conditions. Without thorough backtesting, you're essentially driving blind, relying on hope rather than statistical data. Imagine deploying your EA in a live market without knowing how it handles different scenarios. It's a recipe for a disaster for sure. Backtesting helps you identify potential weaknesses in your strategy and gives you the confidence that your EA is ready for real trading. To avoid this mistake, make sure to backtest your EA using historical data that covers various market conditions. Test it on different time frames, different currency pairs and assets, and even across different market cycles. The more data you have, the better prepared you'll be to handle whatever the market throws at you. Mistake number 2, over-optimizing your expert advisors. Over-optimization, or also known as curve fitting, is another common mistake that can seriously hinder your trading performance. It's easy to fall into the trap of tweaking your EA to perform perfectly on historical data, but this can lead to problems when the EA faces live market conditions. For example, let's say you're optimizing your expert advisor and find that setting the exponential moving average to a very specific period like 52 instead of 50 significantly improves your backtest results. While this might seem like a win, it's actually a sign that your strategy is overly sensitive to a particular indicator. This sensitivity indicates that your EA is curve fitted, fine-tuned to perform well only under those historical conditions. When the market changes, even slightly, your EA might fail because it's not flexible enough to adapt to different scenarios. When you are over-optimized, you're essentially making your EA fit perfectly to the past data, often at the expense of the future performance. The result? A strategy that looks great in backtesting but struggles to adapt to new market conditions, leading of course to inconsistent results or even significant losses. Mistake number 3, ignoring market conditions. One of the most critical mistakes traders make when using expert advisors is ignoring current market conditions. Not all EAs are designed to perform well in every type of market environment. For example, an EA that excels in a trending market will struggle or even incur losses in a ranging or highly volatile market. Let's consider this scenario. You've set up your EA based on a trend following strategy, optimized the settings, backtested it, and deployed it on live account. It's been performing very well during a strong uptrend fueled by some fundamentals. However, these fundamentals shift course and turn the market into a sideways range. You did not take a note of this shift and hence you did not adjust your strategy. Your EA continues to trade as if the trend is still strong. This can lead to a losing streak, leaving you in heavy drawdowns because market conditions no longer align with the strategy your EA was designed to execute. To avoid this mistake, it's essential to monitor the market regularly and adjust your EA settings or strategies to match the current market conditions. For example, you might need to switch from a trend-following strategy to a range-bound strategy, or even pause trading altogether during this market condition. By being aware of and adapting to the market conditions, you can significantly improve the performance and the reliability of your EA. Mistake number 4, lack of diversification. Another common mistake when using expert advisors is relying too heavily on a single EA or trading a single asset. Just like traditional investing, putting all your eggs in one basket can be risky. If your EA is focused on just one asset, you might find yourself vulnerable to unexpected market movements or events specific to that asset. For example, imagine you're using an EA that trades only EURUSD pair. If something unexpected takes place, like a sudden economic event impacting the Eurozone, your entire strategy could suffer significant drawdowns. However, if you're trading multiple assets, say EURUSD, AUD NSD, and gold, your risk would be spread out. Even if one asset experiences volatility or adverse movements, the other might perform well, helping you balance your overall results. To avoid this, it's crucial to diversify your trading approach. This could mean using EA across multiple currency pairs, indices, and commodities. By spreading your risk across various assets, you reduce the chances of single market event negatively impacting your entire portfolio. Diversification not only helps to mitigate risk, but also provides more consistent returns over time, as different assets often perform differently under various market conditions. Mistake number 5, not monitoring your EA's performance. A critical mistake that many traders make is setting up their expert advisors and then neglecting to monitor its performance. While EAs are designed to automate trading, they are not set and forget systems. Market conditions, broker changes, and even software updates can all impact how your EA performs. For example, let's say your EA has been running smoothly for weeks, but suddenly you notice that it's starting to produce more losing trades than before, or even not placing any trades at all. If you're not actively monitoring its performance, you might not realize that a change in the market conditions, a broker's spread widening, or even a technical issue is affecting your EA's performance. By the time you do notice, the losses could have already accumulated. To avoid this mistake, it's essential to review your EA's performance frequently. Set aside time to analyze its trades, check for discrepancies, and adjust settings if necessary. Use performance metrics such as win rate, drawdown, and profit factor to ensure that your EA is still performing as expected. My final thoughts. Algorithmic trading using expert advisors on the MetaTrader can be incredibly powerful, but it requires careful attention and strategy to be truly effective. By avoiding these 5 common mistakes, ignoring proper backtesting, over-optimizing, neglecting market conditions, failing to diversify, and not monitoring the performance, you will be well on your way to mastering algorithmic trading and achieving more consistent and profitable results. If you found this video helpful, please make sure to check out my previous video where I debunk the top myths about algorithmic trading. Link up here. It's a great resource to deepen your understanding and avoid some of the common misconceptions that can hold traders back. Thank you so much for watching. Please don't forget to like this video, subscribe to the channel for more insights, and leave a comment below with your thoughts or even any question you have in mind. I'm always here to help you on your trading journey. Remember, trade smarter, not harder. See you in the next video.